morning. Today is September 18, 2024, and today's FOMC rate decision, and we are in the last few days of the rolling contract for the indices, and things could get a little interesting today. Really anything could happen, but we're still looking at a similar scenario as what we had yesterday. Yesterday we said that there was a possibility to take these lows, and then if we came back down, fill the gap and got inside the range, we will test value area low, and that's exactly what we did. We rallied at the beginning of the day. We were opening with a gap, so we took this highs and then we reversed. You can see these single prints we left here, and then once we accepted inside yesterday's yesterday's range, I mentioned that we were likely to come back to the point of control and to the value area low, and that's exactly what we did. And then we just stayed rotational for the rest of the session, leaving a double distribution. You can see during the day, if you were watching the order flow, you can see that there was a lot of selling here and there was a lot of absorption. There was, people lifting this orders passively, but then eventually they, it gave, and then it filled the gap, and we got back into value. So for today, I'm looking at, first of all, this double distribution. Do we stay in this lower distribution where current value is, or do we move above this area, above 57.12-ish, which is also the overnight high, and then we go back to the 57.20 first, and then attempt to take these highs and fill the gap, check this untested point of control, and attempt to make new highs, all-time highs. SPX yesterday made all-time highs, but not this new contract yet. So all-time highs for this contract is at 57.8250. So that's one scenario, right? We keep the trend going. Usually what happens in FOMC dates is that we just have some moves at the beginning of the day, and then things quiet down. We go nowhere until the press conference, and then the fireworks start. So it could happen that we attempt to get there, we don't quite get there. We attempt to take the lows, we don't quite take the lows, and then after the decision, then there's a stop run. That's usually what I've seen in the past during FOMC day. So just keep your mind, keep that in mind. It's not, these are not days that we usually get a lot of continuation, but anything could happen, like I said. So those are the scenarios: accepting prices in this distribution, going back to this Did I lose connection? Oh, you guys can still. Can you guys hear me? No, I don't think so. Well, I think I lost my internet, but I'll keep recording. Yep, I lost my internet. I'll keep recording and then I'll post it. So maybe my internet is back. Let me know, guys, if you can hear me. Anyway, so as I was saying, the scenarios are either getting back into this distribution or this one, and then see what happens after that. If we take this lows, there's a low volume area right here at 56.69 that should should hold, should act as support and then bring us back to the 20-day point of control. But if we lose that, then there's all this kind of poor structure here. So either we fill this area and, you know, accept prices here, or then we come back all the way down here to where the most volume for this area is, which is down here, the 5600s. And there's a high volume node right here, 5540, which is close to the 50 moving average. Let's see. NQ is very close also to the 20-day point of control. Kind of same scenario, double distribution day yesterday. Barely moved above the previous week's high and didn't take this highs yet, like ES did. NQ has been weaker than ES, and it still has a lot of room to go to get back to all-time high. So, you know, I usually look at them together. So if I see ES running, NQ should run, and if it doesn't, that means that there's divergence, and then I wanna go with the strongest one. Although lately I've been just trading NQ, so crude oil has been accepting these lower prices into this distribution. I said yesterday that if we get to this low volume node, look for a move back into the 20-day point of control, and that's what happened. We got into the 70, what was the high? 70.60, I think, 70.65, and then we came back during the overnight session back to the point of control, almost to the tick. So same scenarios. I'm still looking for this area for shorts and this area for longs, back to the middle of the range. We still haven't moved from there, but today that could change depending on the rate decision. And then gold is here pulling back a little bit. I think that this area, the 25.60 to 70, is a good buy area for now, for a move back to the 5-day point of control as 26.10. So if we get a pullback, I'm looking for to take a long back into this area. So and then above that, like I said, I've been saying the 26.39, 26.40 area, that would mark the completion of this extension for me. And I think that's about it for today. We have tomorrow. We also have jobless claims, so that could also bring some more volatility. But I think after today, there's gonna be the market's gonna be able to price whatever's next. The next move, because it's gonna be more clear whether how much they cut rates, if they cut, and what they're gonna do from now on. All right, good luck.